What is up, YouTube? I'm Adam Odell, Chief Investment Strategist of moneyandmarkets.com, and I'm joined once again this week by my research analyst, Matt Clark, and we're here to answer your questions. You can literally ask us anything. Last week, we talked about trading around earnings reports, and we got into some options specifics, some options advice there. And I don't have the exact question this week, but I understand that it is on the options topic as well, which is probably my favorite topic to talk about. So Matt, I'll let you take that away.
And it's good because I think there's a lot of interest out there with not just new investors, but even with seasoned investors about learning more about options, because they are a way to bolster gains and to see large percentage gains in a relative short amount of time. So there's a lot of interest there. And the question we got actually comes from YouTube, that someone commented on our last Ask Adam Anything video. And it's Crystal. I hope I pronounced her name right. She said, why do you have to sell options close or to close or some to open? And what does that mean anyway? Basically, what she's asking is there are a lot of options to buy and sell options, buy to sell, buy to open, buy to close, sell to open, sell to close. Why is that there? And what does that mean?
Gotcha. Yeah. So that's a great question because if you have your platform, the software that you use to place your orders with your broker, if you have a stock symbol in your platform, you're going to have two buttons. You're going to have a buy button and a sell button. And it's pretty obvious what you use those buttons for. If you want to get into the stock, you buy it. If you want to get out of the stock, you sell it. Obviously, you could sell short. We'll get into that in a moment, but it's pretty simple when you have a stock symbol. And then if you were to load an option symbol into your platform, suddenly you're going to see your order bar change and you're going to have four buttons. One of them is going to be buy to open. One of them is going to be sell to open. And then there's going to be buy to close and sell to close. And I've gotten this question a number of times because suddenly you see four buttons and you're like, well, wait a minute, I want to buy this, but am I buying to open? Am I buying to close? What's the difference? So basically the open and the close part of those buttons is like, are you opening a new trade? Is this a new trade that you'd like to open up? Or are you closing a trade that you already have open? So that's what the open and the close mean. And obviously the buy and the sell works just the same way. So basically, when you're trading options, there's two ways to do it. You can either buy an option, so buy to open. So you're buying an option at one price, and you hope that somewhere down the road you can sell that option for a higher price. And that's just analogous to buying a stock and watching the stock price go up, and then selling it when you're satisfied with the profit and getting out. So that's one thing you can do with options is you can buy them and hope to sell them at a later price. The other thing you can do with options is you can sell them to establish a new position. So much like short selling, where you're betting on the price of a stock to go down, where you initiate your position by selling the shares, and then later in the future, you hope to be able to buy those shares back at a lower price and net the difference between your higher sale price and your lower buy price. You can do that in options as well. So that's typically considered an income strategy. So what you may do is you may sell an option that, and you can maybe sell it for, let's say $100, and that option expires 1 month from now. And you're hoping that option price goes from $100 down to nothing, and you net that whole $100 as your profit. And that's what you would do if you were running an income strategy. You're selling the option to open, and that's why you would use that button, sell to open. And then later, when you closed out the position, if you didn't let it expire, you would be buying to close or buy to cover. So there are some key differences between being long options, like buying options, and being short options, selling them. So when you're short options, you can earn that income because you get that credit right away. You get money placed in your account, and then as long as the stock doesn't go against you, then you get to keep that money. Whereas buying an option, you really need the stock price to move so that the option increases in value. Now, the way I look at it is there's a time and a place for both strategies, but the short option strategy where you're selling it to open is I'll say a riskier strategy because you are opening yourself up to a much larger loss. Typically with that strategy, you're going to win fairly often. Like you may have a win rate of 70, 80, or 90%, but your wins are going to be like this big. And then occasionally when you take a loss, it's going to be like this big. And you actually are exposed to unlimited losses when you are short an options contract. So you have to put some margin money up with your broker. And if that option goes against you by too large of a degree, your broker is going to give you a call or send you an email or send you a little message on your platform, and they're going to say, hey, we need some more money to cover this position. You're at a loss and you need to close it out right now, or you need to send us some more margin, that type of thing. When you're buying an option, which is the only strategy that I do, when you're buying an option, you place the money up front. Okay. So you have to purchase the option. So you have to have the cash in your account, or if you're using a margin account, that's fine as well. You buy the option. And if the option goes against you, if you know, it hits the fan and everything goes against you, that option is just going to expire worthless and you're going to lose the money that you put into the option. But there's really no possible way to lose more money than that. So in my mind, you have limited risk and you have complete control over how much money you're putting into that trade. So if you don't want to lose more than $200 on that trade, then you don't put more than $200 into that call option. So on the flip side, you have unlimited gain potential when you buy options. So if you buy an option for $100, you could make $300. You can make $500. You can make $1,000. You can make $10,000 on that option. It's truly unlimited, the amount of money you can make when you buy an option and then you try to sell it later at a higher price. So those are some of the kind of key differences between being long an option because you buy it to open and being short an option because you sell it to open.
Now, I want to kind of dive in a little bit here because, if people don't know, there are several trading services that Adam does operate. And I'm very fortunate to be able to work on with all of them. And one of them is an option service. It's called Home Run Profits, and it is strictly options. So I guess I want to take what you said and how you explain that, and without divulging too much, how does that apply to your strategy with Home Run Profits?
Yeah, well, that's our bread and butter trade. So I've been running this service for almost 10 years now. We launched it in 2012. I actually developed the strategy in 2011. It's basically a simple strategy where we're trying to find high momentum stocks, not necessarily momentum in the sense that you read about them in the news, but momentum in the sense that they're beating the market. That over the past several months, they're outpacing the market, and we expect that to continue. We do this anywhere in the stock market. We look at different sectors, which sectors are rotating into favor, and we jump on those. If the bond market's hot, we can make bond market plays. If the currencies or commodities, so it's really a go anywhere strategy. But our bread and butter trade is to find which sector is outpacing the market, and then to find stocks within that sector that are also outpacing the market. And then we make a bet that that stock or ETF is going to continue higher. Our holding period is fairly short, anywhere from 2 to 3 months is our target holding period. And we could make good money just buying the stocks over that 2 to 3 month period, because those stocks do on average beat the market. But we do even better than that by buying options. So we actually buy call options. That's probably 80 to 90% of what we do. So if there's a stock that I think is going to go up over the next 3 months and beat the market, I will recommend to my subscribers that they buy a call option. I always tell them specifically what call option to buy, because there's a lot of different contracts out there for one stock. There's a lot of different choices. I tell them the symbol of the option. I tell them what price they should target to pay for that. And I tell them what target price we're trying to get out of that option as well. And I tell them exactly when to sell it later down the road. So all we're trying to do is what most stock traders are trying to do. We're trying to do the same thing with options. We're trying to buy an option at this price and sell it at a much, much higher price. And so we've been doing that for 10 years, and it's a simple strategy, and it's also limited risk. So for novice traders, folks that are just getting into options or maybe have never traded options before, it's a great way to try out that technique.
And then, just to get around a little bit. And again, I'm not sure how much you want to get out on this, but there is another service that you have been testing for some time now, and it is going to release here very, very soon. It is also trading options, but it's got a couple caveats to it, and it's very, very interesting. I'm not sure how much you want to divulge of that.
Yeah, it's tough for me because I'm super excited about the strategy. I literally have never been more excited to share something with our subscribers and our readership. But I can't reveal too much. But it's an option buying service. Okay, it's basically I found a trade that I can make every single week. Okay, and it's a very predictable trade. It comes about on Monday afternoon. So we always get into a new trade on Monday afternoon, and then we are out by Wednesday afternoon. So it's a 2-day trade. I recommend 3 different options trades on Monday afternoon. We're buying call options again. So you know how much money you put into the call options, you know what your risk is, and it's completely limited. And then we sell those options on Wednesday afternoon, win or loss. Okay. So this is a strategy that is extremely powerful, extremely potent in the sense that when a trade goes against us, the stock option that we buy, the call option is going to lose 30, 40, 50, 60% fairly quickly if it goes against us. But we're really using the asymmetry of risk and return. The fancy name for it is convexity. And what that basically means is that on an options trade, when you buy a call option, but I'm just going to use a round number, the most you can lose is $1, but you stand to gain, you have the potential to gain $1, $2, $3, $5, $8, so that you can stand to gain many, many multiples more than you can stand to lose. So if you run that strategy, even if it's 50-50, even if it's a 50-50 coin toss, whether you win or lose that trade, which our strategy is actually better than that, it's a better than 50-50 win rate. But even if it was 50-50, you can still come out ahead, because when you lose, you may lose $1 at the most. And when you win really, really big. 2 weeks ago, we had a trade that was up 500% in 2 days. That was probably one of our bigger trades, but we've had 400% winners, a number of them in the 7 or 8 months that we've been beta testing this. So I actually developed this strategy last December 2020. I showed it to my bosses and they're like, this looks really interesting, but I don't think it's as powerful as you think it is. They started trading the strategy with their own money. And now they're like, well, maybe we should just keep this to ourselves because once we actually offer it to our subscribers, they won't be able to trade it themselves any longer. But it's been highly profitable. It's a fun trade every single week on Monday. It comes along. It's buying options. So it's simple to do. Doesn't take that much money to get into the trade. It's very small dollar amounts if you choose to, or you can put more in there. But yeah, I probably said more than I should, but I'm really excited to launch this, and it will be out in September. I believe the end of September.
Yeah, well, so we're going to have more information on that. So make sure you stay tuned, watch our videos on YouTube, and, we're going to talk much more about options as well. Leading up to and after that, just because again, they're very exciting. They provide the potential for a lot of big gains. You have the potential to limit your losses. And so it's a very exciting thing for even new and even seasoned investors. So Adam, again, thanks for your time. If anyone has a question out there that they'd like to ask Adam or myself or Charles Sizemore, our Green Zone Fortunes co-editor, then you can do so. You can email us at feedback@moneyandmarkets.com. We'll flash that address down below. Or you can also comment on our YouTube page like Crystal did. And again, thank you very much for your question, Crystal. We'll be in touch and see if we can get you some money and market swag for asking your question and us using it. So, which is what we do. If you ask a question and we use it, then we're going to send you some money and markets gear your way. So Adam, thanks so much for your time. We look forward to doing it again, and certainly hope everyone has a great Labor Day holiday, and everything resumes trading back on Tuesday. Adam, thanks again, and we look forward to doing it again next week.
Sounds great. Thanks, Matt.